Well, Havels, but the real star this year is Reliance. Unexpected strength, 15% higher, and that a stock which just is, motoring along very, very smartly. But not that anything large was expected or anticipated today, but a lot of green, which I think is always a delight. How is the best of the rally behind PSUs? PSU stocks have started showing cracks. I think it's not across the board. Banks are doing okay, some power names are doing okay, but railways, a lot of defense, some of these stocks have started reversing. Here's Ajay Srivastava, CEO of Dimension Consulting, on where he has currently invested in the PSU companies.
My guess is that these sectors will have just seen the first run up after almost 2 decades. We have seen PSUs not performing for 2 decades or maybe more. So I think this is the first leg, and people have got really said, it's the new high. But I think it will go higher. I think PSUs will get more traction, certainly in the 5 sectors we have spoken about just now, because simply there is none which exist and there is no competition. And anybody wants from overseas wants to come into India in these 5 sectors has to go to the PSUs. So my guess is that these 5, 6 sectors, including say power finance, that's a unique niche in this country, which again with the PSUs, you can't go anywhere else, PSUs. So you can pick and choose. You want to ignore the sectors? Sure. You want to be in the sectors? PSU is your game. And I think they will give a much better return because for one reason, the dividend policy is not specified. So with the dividend yield, these become very attractive buys. Overall, it looks positive. And with the new government coming in, I guess is that there will be more divestments and more accountability. Boards will get professionalized. So it's in a good wicket to be at least in the 5 sectors. Moving to small NBFCs, and the reason we move large NBFCs is as I think the climate for their ability to raise money directly from the public is very, very good at this point of time. Therefore, if you see some of the leading funds, one company raised 5,000 crore NCDs in exactly 2 days from the market. So, for the larger NBFCs who can diversify away from the bank their funding sources, it's going to be a very good time for the next 2 to 3 years because they have a clean market for themselves. Number two, as the banks start to get out of NBFCs or become a little bit careful, the smaller NBFCs will be in trouble in terms of raising it. If you can raise equity, like you mentioned, I think your NBFC is safe and fine. But if you can't raise equity, we should see lots of consolidation, lots of stress plays happening in the NBFC space. But the top 5 NBFC of this country are very, very good NBFC at this point of time. And I think if one were to put it, rather than putting in the banks, put in the NBFCs because these guys are getting better yields. They can go to give you LAP loans, they can give you commercial vehicle loans, they can give you personal loans, and control quite well at this point in time. Banks cannot do that. They are going to rely on industrial loans where the yields are going to be low. So if you look at 4% yields, you have to be with NBFCs. Banks will gradually, the yield will shrink to 2.5% at this point of time. And therefore, relatively speaking, the sector of large NBFCs, I think, would do much better for equity returns.